How did I make $73 trading Meta put options? So looking at Meta on the 27th at 1426. So let's see, Meta on the 30-minute time chart, 1426. So not this candle, but this candle right here. So I played put options as soon as Meta approached the 9-day moving average, waited for a rejection that did not happen, and later at 1522, when I sold out the position, I secured an easy gain of $73 trading Meta put options. So what was the game plan here? So based off, let's see here, yeah, so basically the whole entire day Meta was in a downtrend, and it was having trouble breaking out of the 9-day moving average. So to me it kind of meant, so if Meta does decide to go up again and tries to break through that 9-day moving average, it's probably gonna have trouble and get rejected by the 9-day moving average. So when I bought here on the 1430 candle, Meta didn't get rejected by the 9-day moving average. It actually broke through it. But as you can see, which what time did I sell out of? I think it was 1522. Yeah. So, but just to quickly look on it, yeah, 1522, which is this candle right here. So when I sold out the position, you can see that Meta was below the 9-day moving average once again. So when I sold out the position and I saw that my position was up 6.99%, I was like, okay, it's reached my percentage target, anywhere from aiming for a 5 through 10% target. And basically when I saw that it was up 6.99%, I sold out the position and secured an easy gain of $73 trading Meta put options. So how can you trade options yourselves, right? So this is how you could do it. Let's look at a random stock here. So I'll show you too how to look for opportunities. You go on this website called finviz.com. You click on screener, you click on market cap, click on mega, click on performance, click on perf YTD, and it's going to show you a list of stocks from worst to best. And I don't know, let's see, let's do PG, right? PG, Procter and Gamble. Do I have it here? Yep. And let's look at it on the 30-minute time chart. So let's look at this let's look at, what is it, August 29th chart. So on the 30-minute time chart, you can see that PG is above the 9 and 20-day moving average. Most importantly, it is above the 9-day moving average. Typically what I try to do is I try to stick to these two moving averages. So if I see that, for example, PG, right, is above the 9-day moving average, that to me automatically means that PG will pretty much be in an uptrend for pretty much the whole day. So if it decides to land on the 9-day moving average, like right here, I could play call options, ride the momentum of PG towards the uptrend, and just make money from there. So let's look, for example, right here, you could have bought PG call options as soon as it landed on the 9-day moving average here on the 1230 candle, and then your selling out point would be as soon as it reaches these previous highs of 157, and basically you could sell out your position once it reaches that resistance level of 157. Typically, also you want to pay attention to your percentage target. So where it says 6.99%, what is your percentage target that you're trying to aim for that day? Are you trying to aim for a a 5-10% gainer, 15% gainer? Typically, I highly suggest not going nowhere more than aiming for a 15% gainer. I would say maximum, the sweet spot to trade your, I would say the sweet spot when it comes to trading, when selling out your position, is anywhere from a 5% through 10% target. So if you try to aim for anywhere more than those percentage targets, it's kind of risky, because then you'd have to hold on to that position for the next day and then just kind of anticipate if that trend will keep on continuing for that day, whether it's in an uptrend or in a downtrend, whether you're playing calls or puts. But for me, if you're day trading, I would highly suggest sticking to anywhere from a 5 through a 10% target. Any more than that, it's just kind of a risky move, because if you're trying to make money for that day, use that money that you made today, that same day, for the next day, you're not worried that, okay, well, now all of a sudden the position is down the next day by 10%, and now the chart is not looking so good in my favor. You're not so much worried. So I would highly suggest being realistic when it comes to aiming for your percentage targets. Realistically, if you're trying to aim for 50 or 100% gainers every single day, I'm sorry to say this, but at that point, you're just gambling away your money, and you're really not going to make any money in the stock market that way. If you're just hoping for the best of trying to make every single day 50 or 100% gainers. So basically, what you're doing just pretty much is, it's simple. You're using the moving averages as your entry points, and typically you want to decide to whether play calls or puts on that 30-minute time chart. So that is pretty much it. Basically, step 1, use the moving averages as your entry points, and then step 2, try to be realistic when it comes to aiming for your percentage targets. So try to be realistic, don't try to be unrealistic, and then suffer the consequences later on, because you thought that, oh, well, I kind of hope that maybe it could go up a little more. But just don't have that mentality. Just know when it also I would say the third thing would be to know when to take your losses. For me personally, I try to take my losses once the position is down, I would say 10% or more than 10%. So if it's down more than 10%, I just cut the trade there, move on to the next trade, and just move on and just learn from that mistake. So that way I'm not just hoping, well, I hope it goes more, and it doesn't go more, and I'm just losing more money as it keeps going down and down and down. So that is pretty much it. This is not financial advice. As always, take care and bye.